Price starts pushing higher, but you're still waiting. You know not to chase it, but waiting hurts just as much as taking a bad trade. So you sit there watching, hoping for price to come back to your entry, but price keeps going, and eventually the move is either over or you finally enter once it's too late. And somehow this keeps happening again and again. It always feels like the move starts before you even have the chance to get in, as if price is already ahead of you. But there's a reason this keeps happening. Traders don't just wait by accident. You see, traders are taught that they should use confirmation because it makes the trade higher probability. They think that the price action isn't enough, so they believe it needs to prove something first. A break of structure confirms continuation. Displacement confirms intent. A candle close validates direction. And the more confirmation that appears, the more certain traders feel about the outcome. So naturally, they become comfortable entering only after confirmation appears. But this is where the entire understanding of trading starts to shift, because the trader is no longer trading price action. They're reacting to patterns they believe can tell them what price is likely to do next. And this is where that misunderstanding starts to break down, because confirmation can only describe what price already did. It cannot tell you what price will do next. Think about a break of structure. A break of structure tells you price already moved enough to break structure, but traders see that and think that somehow means that continuation is now more likely. The same thing happens with displacement. A displacement candle tells you price moved aggressively, but traders see that move and think it confirms future direction. And once you start looking at confirmation this way, you start noticing how traders have unknowingly become delayed, because they wait for patterns to confirm movement that has already taken place. Think of price breaking structure to the upside and forming a fair value gap. Price is already pushing higher, but the trader won't enter until price comes back to fill the fair value gap. So the trader is trying to solve being late to the move by waiting even longer. And that's why traders constantly feel like price moves without them, because they were taught to wait for certainty in a market that was never going to provide it. Imagine a trader who trades support and resistance, but only enters after a reversal candle pattern forms. Price reaches resistance, a reversal pattern appears, he enters short. Price drops exactly into profit as he expected. But if you zoom out, price was already consolidating. He simply sold near the range high during sideways price action. The trade worked because how he positioned himself made sense for the type of price action he was trading. Now later, price reaches the support at the bottom of the same range, but this time no reversal pattern forms, so the trader doesn't enter and price still rallies from support anyway. You see, the only thing that changed was the confirmation pattern. Price was still behaving the exact same way, and this is where traders get confused, because they assume the pattern increased the probability of the trade working, when in reality, how you position yourself with the price action you're trading is what matters. And once you understand this, your focus stops becoming how can I confirm what price will do next, and starts becoming what is a logical way to participate in this price action. How to do that properly is something I explained in my Seeing Price Clearly series. Eventually, traders will realize they missed the move because they spend too much time trying to predict it instead of learning how to participate in it.